Hello, and welcome back to Forex School from Pip Insight. This course is about the one variable every trader shares and most ignore, the clock. The Forex market runs 24 hours a day, 5 days a week, but it does not behave the same way at 9 in the morning as it does at 9 at night. Here's the roadmap. First, the 3 trading sessions and what each one does to price. Then the Asian range, and how London uses it as a map. Then the London to New York overlap, the busiest window on Earth. We'll look honestly at Killzones, Friday afternoons, and weekend gaps, and we'll finish with what time of day can and cannot tell you. Let's begin. Every candle you have ever studied happened at a particular time of day, and that time shaped how it behaved. Before any strategy talk, let's put the 24-hour clock on the wall. The Forex day never really closes, it hands over. Sydney wakes first, around 10 in the evening UK time, with Tokyo joining a couple of hours later. Together they form the Asian session, running through the night until roughly 8 in the morning. Then London opens, and with it the deepest pool of currency trading in the world, running into late afternoon. Finally New York arrives at around 1 o'clock UK time and trades on into the evening. 3 sessions, 1 continuous market. Same pair, same chart, but the crowd holding the pen changes twice a day, and the handwriting changes with it. Sessions have personalities, and so do pairs. Overnight, volume is thin and the business flowing through the market is largely Asian, so yen pairs and the Australian dollar do most of what little moving gets done, while sterling and euro pairs tend to drift sideways in narrow ranges. When London opens, sterling and the euro wake up sharply. This is when the day's real direction usually gets attempted. New York brings the dollar's home crowd, plus the big American economic releases. The practical lesson, knowing a pair's active hours tells you when to pay attention, and when to leave the chart alone. Let's start where the day starts, overnight. With Europe and America asleep, participation is thin, and thin markets rarely trend, they range. On most pairs the whole Asian session prints as a tight sideways box, small candles, overlapping bodies, nobody committing. Yen pairs are the honorable exception, because Tokyo is their home turf, and they will happily run during Asian hours. But here's the crucial idea for everyone else, that quiet box is not wasted time. Its high and its low become the first meaningful reference points of the day, the levels the next session will be judged against. Here's a typical overnight session on a pound-dollar style chart. Every one of these 10 candles printed between midnight and 8 in the morning UK time. Watch how they behave. The second and third candles push up towards 128.48, the fifth dips to 128.20, and then price simply oscillates between the two. That teal box is the entire Asian session, 28 pips, top to bottom, in 8 hours. Now the 2 gold lines, the overnight high and the overnight low. Get into the habit of marking these every single morning, because in a couple of chapters this quiet little box becomes a treasure map. 8 in the morning, UK time. The world's largest foreign exchange center switches on, and everything about the chart changes in the space of 1 candle. When London opens, the market's character flips. Spreads tighten, volume multiplies, and the tight overnight ranges give way to genuine directional pushes. This is where the day's high or low is very often set, because London's job, in effect, is to attempt the day's direction. Sometimes that attempt succeeds and price trends for hours, sometimes it's a head fake, and we'll cover that honestly later in the course. Either way, the opening hours of London are the moment the market stops mumbling and says something. If most intraday traders could only watch 2 hours a day, these are the 2 they'd pick. Now watch a full trading day compress into 14 candles. The first 6 are the Asian session, the teal box, capped at 127.58. Candle 7 is the London Open, a wide-bodied push straight through the overnight high, that's the BOS tag, the break that declares a direction. London trends higher all morning, and candle 10's pullback holds well above the broken range. At candle 12, the green arrow, the New York Open, the Americans arrive and fuel the move, driving the day to a close near 128.72. Asia builds the base, London picks the direction, New York carries it home. From roughly 1 o'clock to 5 o'clock UK time, London and New York are both at their desks, and that overlap is the deepest, fastest, most liquid window of the entire 24 hours. New York has a decision to make when it arrives: agree with London or disagree. If the American session likes the morning's move, you get continuation, the trend day we just watched. If it doesn't, or if a data release flips the story, the overlap becomes the reversal hour, where London's whole morning gets unwound. Watching how price behaves in the first hour of New York tells you which script you're in. Here's the reversal script. The first 7 candles are London's morning, a steady climb from 127.62, building a higher low at 127.92 on candle 4, and topping out at 128.42, the white line marks that London high. Candle 8 is the New York Open. Watch it carefully, it spikes to 128.46, just above the London high, there's the arrow-marked sweep, and then closes back down. Stops taken, no follow-through. 2 candles later the sellers break the morning's higher low, tag BOS, and the afternoon spends itself unwinding everything London built. Same market, same day, opposite author. Now let's join the 2 big ideas together, the quiet Asian box and the violent London Open, because one of the oldest plays in the intraday book lives exactly at that junction. Think about where orders accumulate overnight. Traders who sold inside the Asian range leave protective stops just above its high, buyers leave theirs just below its low. 8 hours of range building means 8 hours of stacked liquidity on both edges of the box. So when London's volume arrives, one of the most common opening patterns is a fast push through one side of the range, collecting those stops, followed by a reversal the other way. Smart money educators call it a sweep, a raid, a purge, the name doesn't matter. What matters is the sequence: sweep one edge, reject, then travel across and beyond the opposite edge. Watch the classic version unfold. 6 quiet candles build the Asian box between 126.62 and 126.86. London opens on candle 7 and drives straight down, and candle 8 punches through the overnight low to 126.48. There's the arrow-marked sweep. But look at its close, back at 126.65, inside the box. The break found no real sellers, only resting stops. From that failure the reversal is textbook: buyers march price across the range, and candle 10 breaks the overnight high for the BOS. Low swept, high broken, trend north, the Asian range doing its job as a map. You'll hear traders talk about killzones, a dramatic name for a simple observation. Certain windows concentrate activity, roughly 7 till 10 in the morning UK time around the London Open, and roughly midday till 3 in the afternoon around New York's arrival. Inside those windows, the moves we've studied, the sweeps, the breaks, the direction attempts, are simply more likely, because that's when the volume shows up. Treated that way, as a filter for when to watch, the idea is genuinely useful. But be careful with the mythology. There is no magic minute and no secret switch flipped at 9:30. It's just rush hour. 2 more clock facts every trader learns eventually, usually the expensive way. First, Friday afternoons. Once New York's morning is done, institutional desks square their books for the weekend and volume drains out of the market. Late Friday breakouts are notorious for going nowhere. Second, the weekend itself. The market closes on Friday night and reopens on Sunday evening, UK time, and if news breaks in between, price simply reopens wherever the new information says it should. That's a gap, and it can jump straight over a stop loss, filling the exit at a worse price than planned. Holding a position over a weekend is a decision, never a default. Here's what a dead Friday afternoon actually looks like. Imagine each of these 10 candles printing from lunchtime onwards, into the New York afternoon. 24 pips of total range, top of the box to the bottom. No expansion, no conviction, just small overlapping bodies drifting lower as the last positions get tided away before the weekend. Every breakout tool you own would flatline on this tape, and that's exactly the point: the market isn't broken, it's finished for the week. Traders who respect the clock recognize this texture, close the laptop, and save their good analysis for Monday's fresh liquidity. Every course we make has this chapter, and it matters more than the highlight reel. Here is what the clock cannot do for you. Let's be precise about what you've learned. Time of day is context. It tells you when moves are more likely and which crowd is driving. It does not tell you which way price will go, and it is never, by itself, a reason to enter. Not every London Open produces a trend, plenty produce a chop that punishes both sides. Remember too that the clocks themselves move. British summertime and the American daylight change don't switch on the same weekend, so for a few weeks each spring and autumn the sessions line up differently. Check your session times twice a year. Tendencies, not certainties. Context, not signals. And here's the failure case, because you deserve to see it. Same setup as before, 6 Asian candles boxed between 129 even and 129.24. London opens on candle 7 and does everything the textbook promised, a strong drive through the overnight high, up to 129.38. Anyone who chased that breakout found the next 2 candles painful, straight back down, and by candle 9 price is inside the box again, the arrow marked fake out. The rest of the day chops around the range. London attempted a direction, and the market said no. No session pattern survives without a plan for being wrong. Let's lock the course in. The Forex day is one continuous market with 3 personalities. Asia builds quiet ranges while the yen pairs do their business. London attempts the day's direction, and New York, arriving into peak liquidity, continues that move or reverses it at the overlap. The Asian range is your daily map, markets high and low every morning, and expect London to test an edge, sometimes a genuine break, often a sweep that fuels the opposite move. Respect dying Fridays and weekend gaps. And keep the honest chapter closest. The clock gives you context, the chart still has to give you the trade. That's the trading sessions course complete. You can now read a chart with the clock in mind, name the session behind any candle, mark the overnight range before London wakes, recognize the sweep, the trend day and the overlap reversal, and, just as importantly, recognize a dead Friday when you see one. Your homework: for one full week, mark the Asian high and low each morning and simply note what London does with them. No trades, just observation. If this course earned it, subscribe and turn on notifications, because next time we dig into risk management, the skill that keeps traders in the game long enough to use any of this. And the reminder that closes every Forex School course: everything in this series is education, not financial advice. No method is a promise of profit, and trading carries a real risk of loss. Practice on a demo account first. Thanks for studying with me. I'll see you in the next one.